Good morning, everybody. Welcome back to the Wilton Report. And today we're going to be looking at the effects on real estate of the Big Beautiful Bill, as it's called, the inventory nationally and the inventory locally here in Princeton. Stay tuned. Okay, everybody, welcome back to the Wilton Report, Princeton's only dedicated video and or podcast on all things real estate. Today, we have a pretty packed agenda. So let's just get to it. We're going to be talking national and local news and some of the effects of the Big Beautiful Bill, as it's called. I didn't actually realize that was the actual name of the bill. I just thought that was like a media thing, but that was the name of the bill. So before we get to that, on the 10th of July, we're going to be having a public-facing seminar talking about ADUs. If you don't know what an ADU is, it's called an accessory dwelling unit. And if you own a single-family home in Princeton, you can build one. So come, just text ADU to 609-773-8054. And then on the 24th, which is one of my favorite public-facing events of the year, and we do a fair amount of them, the mid-year market update. So if you think today's episode is cool, we are going to crush the town-by-town market on the 24th at 6:15. Again, just text market seminar to 609-773-8054, and I will send you the Zoom link to that. So let's take a look at some national news because a lot's been going on with this Big Beautiful Bill, as it was called. So let's talk about SALT. And SALT are taxes, right? It's state and local taxes. That's the acronym for, that's what SALT stands for. So in 2017, under Trump, they eliminated blue states' ability to write off their taxes. So prior to that, there was no cap. So in 2017, it was capped at $10,000. So now under the One Big Beautiful Bill Act, and you can see it if you're looking at this, I really just thought that was a media name for this. That's officially known. That's the official name of this act. Unbelievable. So it raised the SALT deduction from $10,000 to $40,000 and from $5,000 to $20,000 for those married filing separately. So what does that mean? It means people in the high tax blue states can deduct more of their taxes from their federal tax returns. So basically, it rises to $40,000 in 2025, $40,400 in 2026, an additional 1% in 2027, 2028, and 2029. Without congressional approval, it will go back to $10,000 in 2030. So it is temporary. And by the way, this was negotiated by a bunch of blue state Republicans, and this is literally what it says in the middle part of this paragraph. So this was something that was, my understanding, fought for. But again, is it going to have a huge impact on the market? No, but is it going to help people on their federal returns in these high tax states? Yes, so these are the effective property tax rates by county nationally. And you can see little New Jersey in the northeast corner is pretty dark blue because dark blue is the higher tax rate according to Resi Club. My friend Lance Lambert, who does an amazing job with data. Please check them out. So again, it's going to help people in the Northeast for sure on their federal tax returns. I'm not doing any other merit of this bill, so please don't think I am. Just talking specifically how it helps high tax states like New Jersey on their federal returns. So taking a look at inventory nationally. So it's moving in the right direction. And you can see 2019, 2017, 2018, there were more homes for sale. But obviously, we're moving off the pandemic lows back to normalcy, at least on a national level. So that's very good news for home buyers nationally. When you look locally, or you take a look of the 50 states, again, this is from Resi Club Analytics, Lance Lambert, who's amazing. This is 2019 to 2025 June inventory. So again, New Jersey is still down 62%, whereas Texas is up 33%, Florida's up 28%, Washington State's up 26%. So basically, Arizona's up 28%. Why? Because there's new construction in these areas. They can build houses, whether it's more easily or just have more available land, or a combination of both. So there is definitely more inventory in Florida, Texas, some of the Midwest states, but in the Northeast, you can see, Maine's down 44%, New Jersey's down 62%. New Jersey's down the most that I can tell. Here's another way to look at it. So active inventory for sale by June. So June just ended. So in June of 2017, New Jersey had 47,000 homes for sale. In June of 2022, New Jersey had 17,000 homes for sale, a rather precipitous drop. In June of 2025, 17,228. So not the greatest view. The good news is that in June of 2023, we're at 12,000, 24, 14,000, 25, 17,000. So it's moving in the right direction, albeit slowly and probably not fast enough for some buyers, but it is getting better, at least across the state. So what does this mean? It's going to be the same implications as the national. So what does this mean? We're moving eventually towards a more normalized market in New Jersey. We're a long way from it, especially in the high demand towns. And this is a last look at the national data. This is from Zillow, courtesy of Resi Club. And they do a heat index, and this is May 2025, so not June. Red means that it's a seller's market. Obviously, blue or some sort of greenish color there indicates that it's a buyer's market. And you can see on the map, New Jersey is one big blotch of red, as is most of the Northeast. Why? They're older markets. They were settled first. There's no available land to build. It is more restrictive to build. It is more difficult to build. If you connect with me on Facebook, I posted last week about people that had bought or were trying to redevelop a commercial property in Princeton. It took them 3 years just to get ready to submit their plans. 3 years, and they haven't even gotten approval yet. So New Jersey is a little bit ridiculous to try and develop. So what does that mean? And for Princeton, it means there's one less restaurant, which kind of stinks. It means there's less apartments, which kind of stinks. It means there's less jobs. It means there's less taxes coming in. So that's a problem in the Northeast states. We tend to have more restrictive building covenants. Sometimes it's good, sometimes it's bad, but that's what it is. So again, looking locally at Princeton, last year there was 57 homes for sale. 47% of the market was above 2 million, and that's on June 20th, 2024. When you fast forward to 2025, beginning of June, 58 homes for sale, 50% of the market above 2 million. Mid-June, 63 homes for sale, so marginal improvement. And then June 28th, 64 homes for sale in Princeton, 17 homes, 26% of the market above 3 million. And you fast forward to today, it's just kind of holding steady in Princeton at 64. So you're not seeing this precipitous climb in inventory in Princeton. Actually, it came down 1 week over week. And there's 14 above 3 million, 19 between 2 and 3 million. So it's over 50% of the market's above 2 million in Princeton. So what does that mean? It means that you're going to be more challenged to buy a house below 2 million. That's what it means. And again, when you look at the total market, there's 64 properties for sale in Princeton. 50 of them are single family homes. 4 are below 1 million, which actually is quite high compared to what it's been. One of those 4 is an ADU. So it's a $950,000 new construction, 2-bedroom, 2-bath in Riverside. One is a Cape Cod on Ewing Street for $937 a square foot. And you could say it's livable, but it's a non-conforming lot, so builders don't want it. They can't knock it down. Restrictive building covenants, making things harder. So, that one's been reduced. There's not like great product below $1 million. It's not eminently livable for anybody with more than 1 or 2 kids, if that's sort of the segment that's moving into town there. So what's happening in Princeton? We're going to kind of do a quick run through of what happened in Princeton through Q2. And then if you're going to come to the seminar, we're going to do West Windsor. We're going to do Lawrenceville, Hopewell, Pennington, Cranberry, Robbinsville. We're going to do the whole giddy up, South Brunswick, Franklin. So come to the seminar. It's going to be awesome. Just 773-8054. You can text and ask for the link. So let's look at the single family average sold price in Princeton. In 2012, it was 872,000. I'm not laughing because it's funny. I'm laughing because it's crazy. In 2025, that has jumped to $1.868 million for a single family home. That's the average sold price in Princeton. That's up significantly from 2024, 2023. So is there any end in sight? I'll get to that at the seminar. If you want my forecast for the rest of the year, come to the seminar. So single family units sold, definitely improvement. We went from 76 the first 2 quarters of 2024 to 95 this year. So what does that mean? It means more product is coming to the market. What does that mean? It means it's being sold because there's latent demand. Days on market, single family, up 3, nothing, it's sort of negligible. It's sort of hanging around 33, 45, 37, 40. So again, what does that mean? Things are still selling at a pretty brisk pace. List to sale price ratio for single families, it came down 2% from 104 to 102.4. So you're still paying above asking price. It's still competitive to buy a single family in Princeton. And again, this is where it gets interesting, okay? So under $1 million, right? In 2012, if you bought a single family home in Princeton under $1 million, it cost you $670. Today it's $851. So what does that mean? It means the stuff that used to be $850 is now $1,500,000, $1,450,000. The stuff that used to be $400, that 2-bedroom, maybe 3-bedroom cape with 1 bathroom is now $850. That's what that means. So it's pretty tough. Single family days on market, 31 days. So up from 21, pretty statistically insignificant. So a little bit of a movement in the right direction. But again, why would it take longer to sell a 3-bedroom, 1-bath house that needs a massive renovation that you can't knock down? Because of restricted building covenants. It is what it is. So single family homes sold under $1 million, 14 to 16. So we sold 14 in the first 2 quarters of 2024, 16 year to date this year. And again, if you look back to 2016, 69, and 2013, 80. So there used to be a vibrant single family home market under $1 million in Princeton. I would not call it vibrant at the moment, right? It's very, very, very competitive. So again, under $1 million. So the average list to sale price ratio for all single families year to date was 102%. Under $1 million, it's 105%. Why? Because more people can afford that price segment. That's why. So again, 1-1.9, a single family average sold price. It went from 1,349 to 1,501. It doesn't seem that statistically significant. However, what you fail to realize is that 3 to 4 bedroom split that used to cost $850 now costs $1,450,000. That's what that means, right? So that's what's happening in that particular market. Days on market between $1 million and $2 million. Single family went from 26 to 32, still very brisk. And you can see in 2020 it was 110 days in the peak of the pandemic. In 2012 it was 131 days. But again, that was pre all the craziness. A little bit better in terms of the volume of homes sold in this price segment. Last year through the second quarter, we sold 36. This year, 46. It's not that a huge amount of inventory, more inventory came on. It's just that more homes are priced in that segment than there ever were before, right? There's just less under $1 million. And again, you have to bid at least 102% to compete on that price segment. So the above $2 million average sold price last year, 2.4. This year, 2.8. Now, I will tell you, if you ask me where there's an opportunity as a buyer in this market, it's the $2 to $6 million price segment. But again, if you're spending $4 million on a house and you negotiate $200,000 off, are you winning? Right? I don't know. Like, it just seems like a pretty big payment to me, but that's just my reality. So again, there is a little bit of a glut above 2 million. 50% of the market is above 2 million. The stuff that's selling above 2 million is new construction. It sells in days. People love it. They don't want older houses. At least the people that are buying prefer new construction, as is the case. And there's a fair amount of new construction, $2+ million in Princeton. So again, days on market, 56. It actually went down from 81. So what does that mean? It means the stuff that sold faster. And the number of homes sold above 2 million. I mean, this is really like, to me, I should just sort of just end it here. But in 2012, 3 homes above 2 million sold in Princeton through 2 quarters. In 2025, 34. Last year, 27. This year, 34. 2023, 21. So it just shows you there's a lot of money in that price point. What are the most desirable homes? Newer construction, close to town, walk to university, walk to downtown. Why? You have a lot of baby boomers moving into town. You have a lot of people that just, they don't want to be out in the hills of Princeton. They want everything convenient and accessible and walkable. So if you ask me where the greatest market is, it's sort of in that price segment. And again, list to sell price ratio above $2 million, 101%. So it's not like you were getting a deal on stuff that's sold in that price point. Condos and townhouses, like it's kind of depressing. You could have bought a condo in Princeton in 2012 for $678. Last year, $1,098,000. Year to date, this year, $1,266,000. So it's actually gone up. Number of homes sold actually came down second quarter to second quarter, 33 to 29. Condo townhouses in Princeton. So it's not like we're seeing this massive influx of homes. Why? Because where are you going to go? So if you bought a condo or townhouse, let's just say you bought a townhouse in 2018 for $840,000 and you refinanced it during the pandemic and you have a 2.5%, 3% interest rate. Well, that same condo is going to cost significantly more and the rate's 6.5% at best. So you're going to double your payment, if not more. So what are people doing? Hanging on to them. Okay. They're hanging on to them. And that's the other thing too. Like when, people were wondering why I took such a strong stance against taxing, this luxury tax that they've imposed on the real estate market. People are not going to sell houses anymore. It's going to keep the market constrained for inventory, keep prices up for people who want to buy. Like these arbitrary controls on the market just simply don't work. So again, townhouse condos, number of homes sold down, days on market down. It went from 42 to 39, statistically insignificant quarter over quarter. But again, let's just have price ratio 100%. So even though prices went up 30% in the last 2 years, you still have to pay 100% of asking price for a condo or townhouse in Princeton. So that is the latest market report in Princeton. If you want my 6-month forecast, if you're a buyer, if you're a seller thinking of selling, then you should come to our market seminar on July 24th. It's in the evening. You can come in person to the office, have a little wine and cheese. You can connect with us on Zoom. Just text 609-773-8054, text market seminar, and we will send you the Zoom link. That is it for this week's edition of the Wilton Report. If you haven't done so, please hit the subscribe button. It does help the broadcast. If you have comments, please make comments. If you have suggestions or ideas you would like to see me present on, please feel free to use that same number and send me your thoughts. Talk to you guys soon. Thanks, everybody.